time again, my dear friends. Thank you for checking in with the Morpheus to get the daily dose of the red pill, the truth about taking your independence, your financial independence to the next level with facts, without relying on luck. All right, so let's clarify. We're going to be building upon what we've already discussed in the previous videos. We're going to trade by the book. All right, and in today's episode, I'm super excited to continue to offer you guys clarity on how to trade without kind of making certain mistakes, right? So this is kind of, geared to general understanding what we need to kind of really get the whole picture, right? Yes, you can trade, you can make money. No, it's probably not going to mean that in about 5-6 hours you're going to be a billionaire. That's not trading. That's pretty much gambling, and maybe the universe will be on your side. But I would much rather for you to be doing this steadily, day in and day out, couple of hours here and there, and you understand that, and you'll understand essentially throughout these videos that if, we want to live the lifestyle, live the Instagram lifestyle, it's possible, but we need to understand what these instruments offer, how to take advantage of them the best possible way. Chats are open, and my man Henry, thank you so much again. Henry's like my I don't know, my biggest fan. I appreciate you, buddy. Him and and the Donald's in the house as well. All right, the doctor will see you now. I don't know, maybe that was a little weird, but nevertheless, my dear friends, let's kind of like hop into it without any kind of fluff. No, I don't have a private jet. No, I don't know, don't have like golden toilet. But you know what? I live a comfortable lifestyle. I can be anywhere in the world making money. And I kind of want to share my vast experience about this with you as well. Now, yesterday we started talking about support and resistance. This is something that's universal. Basically, everybody understands that there will be, no matter if you're trading, I don't know, euro, dollar, Bitcoin, or, I don't know, Uncle Ted's hot dogs, there is a price of interest for investors. Right? Price of interest, whether it's to sell or to buy. And this is where support and resistance, when you're looking at the chart, if you want to wake up in the morning, not even brush your teeth, I don't know, just make yourself a cup of coffee, sit in front of a computer with like your bunny slippers, this is still something that's going to be very, it's going to paint a very good picture. A level of interest. When the asset reaches a particular point several times, it kind of paints a picture about the tug of war between the bulls and the bears, right? So this is actually something that's very, very cool. Very cool because, I mean, I cannot live without this particular instrument, and, well, I'm kind of like presenting it for your viewing pleasure as well. All right, so let's kind of take a look at what we got here. So today, yesterday we talked about support and resistance. Today we're going to be talking about Fibonacci. Fibonacci is actually, also a wonderful instrument. Let's see, I don't know, we got like a 5 minute here, but I kind of played around a little bit with the time intervals, which is something that is going to be happening this week as well. I'll tell you why. The most popular chart is the candles, right? The Japanese candles, there is right here. I mean, you are able to choose a line graph, but I don't know. I mean, it's not as popular, and there are reasons for that. It's kind of not really as informative, right? We understand that here we got a particular ability to choose how much information is stored into each one of these candles, whether it's a 1 minute, 2 minute, 3, 5, 10, 15, and so on. And this is kind of a cool thing. This is where we understand that when we look at a candle, we see the highest, the lowest point, point of, the quotes, and we see where it opened and where it closed, right? So we see that at a glance, and it's kind of, I don't know, intuitive or user-friendly. And one of the instruments, right, that's why the Fibonacci retracement, Fibonacci fan, are located here. So these instruments, right, we are able to take a look and, I don't know, find particular points, right? Because, 1, 2, 3, we kind of get an idea where the asset is kind of meeting the resistance, right? The resistance, the ceiling, the glass ceiling, or the support, right? So if you're, maybe looking at slightly larger time intervals, like 5 minutes, right? You might be able to poke out and say, hey, right there was actually a relatively decent, I don't know, first support level. Then it's kind of meeting it as a resistance, and you can set this up. But more often than not, the graph is not the graph is not always very linear. That's why we do have different instruments like a trend line, right? Something that you're able to set a support and resistance level at an, at a, I don't know, let's say like a diagonal, right? At a slope, at a slant, right? And it still, doesn't mean that, oh no, this one's not good and this one's good. It just, it kind of, once again, paints a picture between, the tug of war between the bulls and the bears. And just like yesterday, I mentioned if the acid reaches a point 3 times, we could say a 1, 2, 3. On the fourth time, it's a point of interest. It doesn't mean something's gonna happen. It doesn't mean that it's gonna go up, definitely, and it doesn't mean that it definitely is gonna bounce away. But my dear friends, that's why we have other indicators to kind of give us an idea that, hey, maybe something's gonna be happening at this point. You're able to look at leading, lagging indicators, just like we talked about this over the weeks, and get confirmations. Now, remember that I mentioned this is a false breakout. It actually didn't, I don't know, negate this particular resistance level, right? Because it went outside on one candle, but on the next one came right back in, right? So it stays the way it is. So now it's one, kind of like a 2, 3, 4, and a 5 times. So this is actually a relatively decent resistance level. And if it goes back up to here, it will, once again, it's a point where we will be very curious how the asset will be, reacting. All right. In this case, it's euro dollar OTC. I don't know. I like OTC because there's no fundamental fluff. There could be right now, I mean, we did talk about the fundamental analysis a little bit with the macro statistics, like the NFP, CPI. Those are scheduled events, right? And we knew about them ahead of time, but this week there's not really a lot of exciting moments. That's why we're focusing on technical analysis, and this is usually something that's a bit more preferred to be done in the OTC because there is no fluctuation. Right now, I don't know, maybe in Europe or in America, something drastic will happen and it will move the market completely outside of the technical analysis range. This is why it doesn't happen in the OTC. This is why I do prefer to do my technical analysis while I'm trading in this, because this is where people study charts, not the news that affects the, essentially that fundamentally pushes hundreds of millions of people to go and buy and sell in forex, certain positions that would reflect, in the real market, the growth. Here it's buying and selling that's done from pocket option traders. Granted, there's a couple of million of us here, and it's great to be part of such a wonderful community. But nevertheless, this is something that we need to keep in mind. Why I'm trading in the OTC more often than not, but this is something that's applicable everywhere. And as I mentioned, hot dog stands, you can actually apply the, binaries to something like the weather. But anyways, all right, so, uh, did put a little bit of, certain support and resistance levels. Actually, I don't know. So let's actually go through the instruments. All right, we got the horizontal line where we, kind of determine whether the level of support or resistance is viable, but it has to be like, in terms of horizontals, preferencing. The other one is vertical line. I think that this is more to accentuate a particular point. Hey, look, right there, at this point, there was this, there was that, and that's why this is pointing, this is a good point of interest, so we can, we can do that. Array, it's kind of like the same as a line, but it goes to infinity. All right, so you don't stop array, but you can set it up, hey, there it is, there's a 1, there's a 2, there's a third point contact, whoosh, and it just goes on to infinity. That's the array. Let's remove it. And, all right, next one is Fibonacci retracement and Fibonacci fan. We're going to go through that. Trend line is this right here. Parallel channel, actually, I do like this as well. You're able to, I don't know, you're able to kind of immediately set up and see if this is something that kind of mashes up into a particular movement, between a channel, creating a channel. So it's like asset playing a ping pong between one side, ping, 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 going back and forth. But some traders will actually create a several pip difference, and they'll, set a support. So let's remove this one. There we go. They'll set a support or resistance levels with a little bit of like a discount for like a few pips worth of error. Um, this is not an exact science, right? It doesn't mean that it's if you put the line specifically on a particular point that the next one, if it doesn't mash up to a few pips, that it doesn't work. It's not an exact science, but that's why some people will choose a channel. They'll create this kind of a small line with a few pips worth of difference, and once again, if it goes inside and slightly through and then bounces back, they don't take action until it's breaks through, right? So there is a bit of like a grace period here. And so that's what the channel does, but you can actually also kind of, hey, look, there's, ping, 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 goes out, through a particular channel. And once again, we remember that if it bounces back, there's a higher probability. This is key word. Trading is about higher or lower probabilities. You got 3, 4, 5 favorite indicators. If 2 out of 5, let's say, show you that it's a good time to enter into a position, but the other ones don't, they have conflicting signals, you might open it for $1. If 3 or 4 out of 5 show you, you might open it for like 3, $4 as a first step martingale. But if every single one of these indicators show you that it's a good time to enter a position, now, you might open a much higher position, not like 20% of your balance, but because that would be illogical. This is not something that we encourage, taking chances, because there is never 100%. This is even though you have the highest probability of success, it's always like 99%. There's never a 100% guarantee that the market will do what you're expecting it to do. That's why money management, most people think that it's, here, the trading is, in the trading that the money is won, but actually it's right there in the money management, and we'll cover that at some point as well, because you don't need ideal statistics to make money. Anyway, so, this is where the channel, the parallel channel comes in. The rectangle, I kind of have it here, kind of loosely drawn, because this is actually a double top, right? So we got the asset that's been going up for a while, reaches a point, it retraces, and then it reaches that point again and retraces, and you're able to highlight a particular area. If it bounced away upwards, we could have extended that, and if, in this case, if it touched it again the third time, would have been triple top pattern in Forex, with a higher chance that when it reaches down and it breaks through, that it's going to continue to break through. So you're able to kind of like draw these, highlight these areas and understand that, hey, there's the neckline right here. Well, neckline is for head and shoulders pattern, but nevertheless, just bear with me. So it's a 1, double top, it breaks through. We kind of have an idea that there's a higher probability that there's going to be continuous downward movement. In this case, if every one of these candles is 5 minutes, which means there is 15 minutes worth of a decent downtrend right here. So, all right. So actually, anyways, let's kind of like remove all of this, and because right now the whole point of today's video is to show you the Fibonacci, which is all right. How would I characterize Fibonacci? Fibonacci is kind of like a general understanding, right? A general understanding of what you might expect from an asset when there is a trending move, All right, well, let's take this one into, for example. All right, so we go into graphical tools and Fibonacci retracement. All right, so you see this particular dot, a white dot here and a white dot here. And what we want to do is we want to set this at the top of the movement, and we want to, the highest high, so to speak, and this one at the lowest low. All right, and what happens though is that I kind of mentioned this through previous videos that the retracement happens when people cash out, right? And this is kind of a general understanding of when majority of people could choose to exit. It doesn't mean that it's going to happen again, right? When we set up support and resistance levels, it just becomes a point of interest. This is technical analysis that revolves around math. But the graph is moved up and down because of the people, the emotions. And this is where it's kind of important to understand especially important to understand the difference between technical analysis, right? So, in this case, with the retracement, it usually means that it kind of automatically plot a level retracements, and it's typically at like 23%, 38%, 50, 61, and 78. These might be like kind of like I don't know, weird places, but it's something that we could understand, right? So there was a move at this point, there was a bit of a retracement, so it kind of came back down. I don't know, as I mentioned, it's not an exact science, but we see some false breakouts, but in these points, you are able to see if there is a reversal, and if that's the case, it could be for a while until it breaks through and continues again. So we could adjust these a little bit, right? So there was a, bounce back here. There was a bit of a, I don't know, maybe we could, as I mentioned, retrace a little, kind of adjust it a bit. All right, so kind of like this, right? So there was a bit of a retracement here. It touched, bounced away, broke through. Not exact science, as I mentioned. There's not bodies of candles, but the wicks touched. There was a bit of a bounce back, so it might not look so big, right? Between 1330, here it's approximately 1339, so 9 pips. Remember, yesterday we talked that 1 pip with euro dollar in forex equals roughly like $9 to $10. So this would have been this particular retracement from here to here if it was like 9 pips, right? Like 1330, and this one is 1339. We're looking at like $100. So, maybe this was something that's, prompted somebody to cash out. When they opened the position here, they closed it here, so it bounced away. At this point, they started to push it down again. And it broke through. At this point, you can see that it sawed it a couple of times. Bam, 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 and then it broke through. At this point, there we go. It broke away. So it's kind of like a template, for the lack of a better word. It's like a template. It doesn't mean that it's going to be, but this is something that you can just put out and be like, hey, maybe at this point you look at in real forex. I mean, maybe you would look at volume indicators to see how many people are buying and selling at this particular time. But nevertheless, this is something that we're applying this to binaries. And so there we go. So this is kind of like a template of when the clients might be interested in a particular, cashing out moment. So let's kind of leave it at that for this. Hopefully it's understand. But if this is something that's not clear and you guys want to discuss this one-on-one, hit us up in the, hit me and my team up in the Telegram channel where, you're going to talk to me specifically, one-on-one, and get any kind of clarity to your questions about financial independence and doing it by the book, not based on luck and somebody's hyped up opinion about a trick. All right, so if we take this and we kind of remove, we go again, to the highest point. I don't know, maybe we can actually see if there is something in here, right? So the lowest point, the highest point in this particular movement, and we kind of see, there it is, there's a bit of a retracement. It broke through, used this as a, I don't know, maybe as a support level, bounced away. kind of broke through a lot, kind of retraced, there it is, but it saw it at this particular level, there it is, at this point it retraced. As I mentioned, it's not an exact science. Maybe we could adjust it a little bit to see these levels a little bit more clearer. But as I mentioned, higher probability of what might be happening, a point of interest, and this is where you look at other indicators. Now the other, right, so Fibonacci retracement, at what point, right, and this is a keyword, at what point, at what level of support or resistance there might be a retracement. What is a retracement? Donald and Henry know about this because they've been with my videos for for these like 2 weeks almost. It's people cashing out. Retracements are people cashing out their profits. That's what it is. There is no situation where the market is going to go up linearly. It's going to go up in waves because at some point people will want to cash out their money. All right, that's important to understand. Now, Fibonacci fan also has two lines, right? And we can like put this one here. And this one is adjusted a little bit to see also support and resistance levels of a trend, right? So while it's in the trend, it retraces and it bounces away. So it pretty much has, the same purpose as as the Fibonacci retracement, but in this case, it shows a little bit more, I don't know, really, it's actually so intuitive to me already, but basically Fibonacci fan, it's a technical analysis tool that uses diagonal trend lines based on Fibonacci ratios to identify possible support and resistance levels as the price moves over time. It helps traders to visualize the potential areas where, essentially where the trend might, slow down or reverse, right? This is essentially it. Now, look, if we set this, right there, right in, we adjust this for a support level. We got like a 1, a 2, a 3, a 4, 5 possible point contact. When it breaks through, this is the breakout strategy. I think we're going to go into a higher detail about this and more examples of that tomorrow. Or wait a second, let me actually just double check when we're going to be doing that. Yeah, breakout strategies tomorrow. So today is Fibonacci's, right? So support and resistance levels, we can set them up manually, right, with trend lines or rays. So when it breaks through, you're able to understand that's it. This particular resistance level is now being changed into a support level, and you're watching it 3 times it touched. That means that the 4th time when it bounces away, chances are it's going to continue to bounce away for a little bit, but when it breaks through, chances are it's going to continue to break through. And look, as I mentioned, not an exact science, but at this point it bounced away and it broke through. It broke through the 2 of them, but then there it is right here. 1, 2, kind of like a false breakout. 3, and this is, we could also quantify this as a false breakout, maybe just a little bit of adjustment to see if it fits, right? But generally, you are able to see certain patterns evolve, how the market is behaving based on these templates. What do I want to say about Fibonacci? Fibonacci is like the rules of driving, right? If everybody followed the rules that are set for a driver behind the wheels in terms of speed limit, in terms of not drinking and driving or not texting while you're driving, if everybody followed the laws of being, responsible driver, things would be much more predictable. You are able to go on the green light without looking both ways. But now it's not really a chance because somebody might be texting, not seeing that it's a pedestrians right away, and mow down some people. Unfortunately, it happens in the world. That's why you still have to be cautious. This is a great template that would essentially kind of give you an advantage if every single one of us would follow it. But that's actually, once again, what the purpose of these courses, of these lessons, of these streams between me and you guys, is to give you as much knowledge as possible about the rules that govern this particular system, the trading, and within these rules, you are able to navigate safer. Imagine if somebody, I don't know, an Eskimo that never seen a big city goes in there and doesn't know the you know the I don't know the rules of crossing the road, or how to navigate. He's at a higher risk of, I don't know, of being hurt. Here it's the same thing. It doesn't mean that everything is going to happen exactly as it should, because most people, that open a trading platform, they might have been fooled by some sort of, I don't know, round booty, fluffy lips, Instagram poofy, with gold bars and private jets, and they think that this is so easy. It's not difficult. It's not magic. We understand that there are rules why, this is going to be happening, just that we need to kind of be aware that it's not exact science. All right, so when we look at Fibonacci fan or Fibonacci retracements, these are points of interest. We also need to look at other indicators. This is something that's very important. Fibonacci or support and resistance by themselves are not enough. I actually, throughout my, God, already like 13, 14 years worth of speaking to people, the VIPs, the regular clients, my friends, somebody says, I don't use indicators. I just look at the chart. And I'm like, well, yeah, that's not really giving you an advantage, really, because you might understand points of interest, but you not understand the volume behind this, right? You might understand the point of interest if there is, or you might know the point of interest, but not understand if there is a trending move, or if that trend has been going up for a while, maybe not enough of the strength of it. If there is a reversal, if there's a pullback, if you're following with the trend, or you're waiting for reversals with certain indicators. So there's so many ways to trade. And all of the variety of instruments are here, right? There's a big choice of indicators. Why isn't there only two indicators? Because it doesn't work for everybody's approach to trading. Whether you trade every single minute, or whether you trade like you get signals on 2, 3 per hour, right? That's certainly different. You need different instruments to analyze the graph, and to take advantage of this. So let's see. Let's maybe see if we can get some more maybe recent examples. All right. Let's delete, and let's. All right. So go to Fibonacci retracement. We're going to take. All right. Let's see. We're going to take maybe the highest high at this point, and well, we could take the lowest low, which was around here. Now let's see if we, so there we go. We could adjust it just a little bit, right? There it is. And we see, so at this point it retraced, it kind of broke through, bounced away, broke through. A couple of times it sawed through this. There could have been like a false breakout at this point, but this would have been actually a point where I would have sold. But because this is a minute candle, I mean, obviously you wouldn't really open a position for like an hour at this point with a minute graph. So we're actually going to talk about this week the multiple time intervals and what kind of information that presents you, which is really cool as well. So you see that there are certain points of that could be following a particular template, right? So when we were talking about here, it was a support level. Here it's a resistance level. Here it's a resistance level as well, right? So it bounced down. It bounced down to this level before it reversed, and it went upwards for a while. And actually, I would have assumed that if it went up, I would have assumed that, it could have gone up to this point, but it didn't. All right, so this is something that, again, is very important to understand. Yes, it is a template that might give you, and this is something that you can reverse. There it is, the top part, and we, I don't know, reverse. There we go, something like this. Look how beautiful that aligns, man. That is sexy right here. This is, I don't know, maybe it makes me weird, but this is something that gets me excited. Look, 1, 2, 3, pretty much 4 broke through, and then it started to bounce away from us. So it was a resistance level. Now it started to be a support. Then when one, actually, we could have drawn a line across here as well. Let's actually do that. Look. trend line, and we could, there could be something multiple. Yes, it confuses, it kind of clutters the screen, but we got 1, 2, 3, 4. It broke through. There was a false breakup, but when it broke through, it went out there. But look, bounced away, broke through, kind of kept it here as a resistance level, bounced away, kept it here as a support level, bounced through to the next, right? So there is a higher probability of when it breaks through that it's going to continue. Right now, it broke through, so chances are, according to this template, that the next point of interest would be somewhere here. Even if it goes sideways, slightly upwards, it could have, the next point of interest is right here. There it is. So you obviously would turn on a whole bunch of indicators to kind of find out, hey, there it is. And actually, look, CCI is above the middle. It's a commodities channel index, but it's still used. It's, one of the favorite ones. But if it continues to go up and touches positive 100, there's a higher probability that this, the asset is going to continue to go up. Also, we are able to see a support level forming with a 2-point contact. 1, 2. So if it's going to go up a little bit, yes, it's going to retrace and it's going to test this line one more time, perhaps, before reaching up a little bit more. And so there's a squeezed pattern right here. All right, so as I mentioned, not something that you should be using by itself, but look how beautiful this is. Look how, what beautiful information it gives you. All right, so let's see. We don't really have as, you guys are not as active. I mean, we got Henry and Donald here, which I, always appreciate you guys. Chats are open. Chats are open, my dear friends. I hope that all of you will take advantage of reaching out, talking to me here or in the comments. I don't know, you can ask me about my beautiful haircut. Or better yet, about the topic at hand. I want you guys to be able to live the life you want, but we need to once again understand that there are rules that govern this particular system. And as I keep mentioning that this is something that's applicable to everything, right? Let's see if we got, well, Bitcoin is not available, right? We got only OTCs right now. I don't know. Let's go maybe commodities. We got anything in commodities? Also OTC at the moment. Why is there everything OTC? Do we got to get some real stuff or not? Actually, you know what? All right, whatever. Let's go to euro dollar in the real market. Let's see if we can spot with Fibonacci. Let's go Fibonacci fan, right? So once again, let's go to maybe the lowest point. I don't know. So the lowest point is over here, and let's adjust it a little bit to kind of fit the support, the resistance level. There it is, something like this, right? So we have there is a resistance level right here. Resistance level several times it touched right here. When it bounced through, there it is. It, reversed at this point, false breakout, reversed at this point, reversed at this point. Beautiful trend, beautiful trend. And once again, you are able to see that there is a particular pattern here, right? So in the real market with euro dollar, this is something that you are able to, or not just in the real market, anywhere really, you are able to assess this. Let's see if we can do a reversed. All right. Well, all right, I guess we could do something like this. All right, so we see, right? So there was a kind of like a downward movement. We see that across one level there was several points of contact. Once it breaks through, it kind of bounces away from the next one, and or it saws particular. So as I mentioned, not exact science. There, it's maybe something like this, right? So even in the movement that's a little bit tight, it's still, there was a downward, kind of trend here, but you are able to see established maybe support levels. You are able to see established resistance levels, like a whole bunch of times right here. So not a guarantee, but it's a nice template and gives you a kind of understanding when certain people might want to cash out. All right, so I'm hoping actually that Donald Henry bring in some friends next time. Hop into here. Maybe I don't know. Voice your thoughts. Voice your opinions. Give me some something to talk to you guys to clarify. I don't know. I feel like I'm monologuing a little bit here, but nevertheless, I think that all of this is very interesting. I burn with passion for these assets or for this kind of trading, for this kind of investment. All right, support and resistance levels could be set manually, based on exactly what the market is doing. But this is kind of like a lagging indicator, right? Well, it's kind of at the same time, it's a lagging and leading indicator as well because it tells you what the market might be doing. If it breaks through, chances are it's going to continue to break through. If it bounces back, then chances are it's going to continue to bounce back. So, right, so you can do this kind of manually and see the patterns appear, or you are able to use something like a predetermined, kind of like a template with Fibonacci retracement or Fibonacci fan. Maybe you guys can test out both to see what kind of I don't know statistics you guys have with that. Maybe you can leave that in the comment section. But there it is, right? So we got 1, 2. I would have extended that line. 3, once it bounced back, chances are it's going to continue. And you got here 1, 2. You understand that, hey, if it reaches this point, that would be a third time it bounced back, which the higher probability is going to continue to go up until what level? What is the level of interest? Damn Skippy, here. And if it broke through at this point, you see, actually, this is why we need to wait for the candle to close, because when it breaks out, be like, oh, it's breaking, but then it went and right back under the channel, the point of interest, and then it continued to kind of bounce back. As I mentioned, not an exact science at this point, right? This point right here, I think I would have preferred to have a parallel channel with a few pips worth of grace period, and I would have had something like this. Let's see. There we go. Right, there we go. Look, it's beautiful, right? So it's not exactly on the body of the candle, but it also kind of gives you a little bit of flexibility so you understand. If it's within this range, there's no action needed. But if it, kind of breaks out, closes outside and continues, then, yeah, maybe that's a good time to enter. Yeah, right now we actually have a pinching, a pinching factor, right? So for a good time, the asset's been going upwards. See, so it's it came from this point to a higher point to a higher point to a higher point, but also for quite a bit of time now, it's a third point contact. 1, 2, 3. If this goes down a little bit, there's a pinching factor, which means that actually also very important. Let me show you. When something like this happens, when there's a pinching factor involved, you are able to determine that the size of the movement after the breakout could equal the widest part. So if it breaks out, chances are it's going to continue to go up all the way here. But if it breaks down on the lower side, chances are it's going to go back down here. All right, so this is something that, we talked about yesterday with support and resistance, but let's see how this plays out a little bit. I don't know. I'm gonna shut up for now and just gonna look at the graph and see what happens. But remember, we give it a little bit of a grace period, right? Because a few pips, because it doesn't mean if it, but it does look like it's about to break out, right? So we got 15 seconds until this candle closes, and I think that I'm going to trade till the end of the minute. And look, you see, oh man, I don't know. I think I might actually wait. Man, this line is pissing me off here. All right, I think I'm gonna wait just until I see what this candle does right here. Because right now it's a little tricky. It's sawing this level, it's testing this, but it's meeting resistance. Actually, with regards to indicators, we could take a look at ADX, and oh man, it's at like really low. I mean, it's like 10%. There is really no trend whatsoever. But CCI is on top. I do believe that I missed my time. All right, let's say I do believe that it's going to go upwards. So let's see if we can make some money here with you guys. And while, first of all, they did break out here, so chances are that it could reach this level. Once again, not something that's a guarantee. I am going to go for a $20 second step retracement. I still think that it is going to go up. Maybe we can turn on the parabolic. Yes, it did go under. Yeah, I mean, I'm pretty sure that it's going to go up. So we have like a relatively decent 1, 2, 3. And on the fourth time, it did break through. So let's see what's going on here. 40, till the end of the candle, 45. So I actually don't think that I'm going to need to go to the second step martingale, but you know what? It's never something that's a guarantee. But this is what I'm saying, though. You are able to establish a point of interest with support and resistance with Fibonacci's, and you're able to take advantage of that when other indicators confirm this. All right, so there we go. Any kind of question, I don't know, if the guys, maybe somebody is coming across this stream, you guys want to make money from any place in the world, pocket option. That's what, pocket, in your pocket, you are able to take it with you anywhere, and put some money together. Not something that, as I mentioned, maybe not something that's like $1 million in one day. That's not really trading. That's maybe a bit optimistic, but nevertheless, I do believe that you are able to make money. So I do understand that after a relatively decent move. Now, actually, notice this. It is interesting that uh, our prognosis is that it's going to go up and much higher. But notice that it's retracing at this level right here, right? So it is being sawed. So somebody that opened position here understands that this would have been a good resistance level, and maybe right now we are going to see a red candle. There's a bit of a pullback, somebody cashing out, and I think that I would need a second step martingale being ready in 4, 3, 2, 1, and going up. I do believe that it's still going to go up. Wait, oh man, I screwed up the time again. See, maybe some of the things about trading with the mask on, the view is not the best. All right, but all right, so let's see. Obviously, I don't need to open the position higher, but I think that I want to take a third step martingale just in case. Um, as I mentioned, I do think that it should continue to go higher, but nevertheless, this is always something that is a possibility. We are able to see a resistance level possibly forming right here with a 2-point contact with a 1, with a 2, and I think that I would even adjust this level. This level is still valid, right? Actually, let's remove some of these previous levels so they don't clutter the screen. There we go. But I would copy another one, and I would say that from this point right here, there it is. There is a, right, so 1, 2, 3, it broke through. This particular level right here is no longer applicable, but we do have validity in these channels right here. So I would say here, it's a 1, 2, and this is a possible, it's not yet a confirmed level of resistance, but we also have, would make it a little bit fatter. Actually, I would probably make this a different color as well. Let's make it a yellow. There we go. So far we have like a channel that is going higher, but it is resisting at a particular point right here. Right, so the volatility, right, the strength of this trend is like non-existent really. 16, it was even smaller, so we are able to see 1, 2, 3. So it is I don't know, a valid level of support. And so if it breaks through right now, we could understand that it has a potential to go to the next level of interest, which would be this, right? We got 1, 2, 3. Here's a fourth one. So we'll see. But it is being pinched between the resistance level here and the support level here. So at some point, maybe not right now, maybe not even for like the next hour, it could actually just keep bouncing back and forth right here between, but these levels are still valid. And we're just going to extend them, and theoretically, there is a pinching factor. There is a pinching factor, you know, or I don't know, I keep saying factor, but there's a pinching possibility, and right about there, around, I don't know, around 6 o'clock in the evening, GMT plus 3 times, so over an hour from now, there we go, it broke through. It could be a false breakout. We'll see what happens on this candle. You could have taken, I don't know, did I win the last position? Oh, yes, I did. All right, cool. I think I've been blabbering with you guys. All right, so let's go back to first step martingale, and let's, kind of put it to the next minute, and yeah, let's sell it. Actually, you see, it approaches the parabolic, and let's see. See, ADX is still down. We got CCI pointing down. Parabolic switch to the top. I do believe that it's going to go down to this level, but this is actually a really small, but yes, once it breaks through, so in 7 seconds, if it closes below, we could actually take another position and go down with it and go lower. Right there it is, open lower, because it could be a false breakout, and this candle could close here on the top. Why am I opening positions for like a minute plus? God damn it. I'm rushing a little bit, I guess. I'm not focused, but 1, 2, 3. If it breaks, if it goes down, it should continue to go down lower. CCI touched the bottom, so I do expect parabolic is on the top for only 2 candles. I do expect it to go down a bit lower. It's just I really wish I have to be a little bit more focused with what kind of time settings I put up. So it looks like the $10, the previous one, I should win. This one, it's questionable. I think that if in 15 seconds, the previous one should have closed, and this one should have closed as well in 10 seconds below, so I would have been in the money on both accounts. And it looks like I should be, but there's still 1 minute left after 1, 2, 3 relatively big red candles. There could be a green one, because once again, somebody would be cashing out, and this is something that could be visible at by this level, right here. You see? So we do have, 1, 2, kind of like, there was interest or resistance or support, doesn't matter, right? So there was a bit of interest here, there was a resistance here, support here, resistance here, support here. So it's breaking through. It looks like I, should be in the money as well. But yeah, just be careful. I mean, all of the things that we know, just like the drivers, you know how to drive properly without cutting somebody off and doing some crazy stuff. It is important that, certain accidents don't happen on purpose. They happen by accident. Here it's the same thing, all right? So proper money management, risk management, but it is something that's important. So I've shown you, right, in live market, if you go to pocket option, especially through our link, which actually would give you a massive advantage. This is something that you can talk to me one-on-one about. I could even insure your trading. I can put my money where my, I don't know, mouth hole is. And insure your trading and to make sure that I'll pay. If you're losing some of this, I'll pay you back some of the percentage of your losses. All right, but once again, something that you can discuss with me one-on-one, because these offers, they vary a little bit between people. So I've shown you today, support and resistance levels are important. These are points of interest. There are rules that usually govern this. Once it breaks out, chances are it's going to continue to break out. Once it bounces back, chances are it's going to continue to bounce back. Right now, there should be a green candle because what do we got here? 1, 2, 3, 4, 5 red candles in a row. That somebody's made some good money, right? So from this point right here, somebody made some really good money. Let's see, in Forex, what do we got? 1369, great number, to 1357. Well, I don't know, 12 pips, $120, right? Not bad. I'm gonna cash that out. Whoosh. I mean, this candle should be green, but we'll see, maybe not. So as I mentioned, there should be a retracement, and maybe actually, depending on what kind of intervals you would have had, what kind of expiration you would have had, you could have already cashed out at this point right here and continue to push it down. That's why the wicks, the information here is presented as well. All right, let's take a look. What do we got here? What do we got here? It's time to call it a day. My dear friends, once again, tomorrow, let me just once again confirm, so that you guys are going to be here with me. I know Henry and Donald are, my regulars. Appreciate you guys. Tomorrow we're going to talk about breakout strategy, exactly what we talked about, exactly what I've shown you here with this. We're going to show more examples of this. All right, so breakout strategy, bounce backs are the following day, and difference of time intervals is going to be on Friday before we take a break. So, chats are open, comments are open. My dear friends, please do not hesitate. This is all about finding out how this all works, and essentially how we can take advantage of this. You don't need ideal statistic. You don't need every day to be a winning day, as long as it's not, losing days are part of this. It's just that it cannot be 100% loss, right? There has to be a limit loss. You aim for 10%. It takes time to get to 10% per day. So it shouldn't be like a bam and you lose 10% in one go. It should be a time that you realize that, hey, whatever I was doing that was working, it stopped working now. And if you lose 10%, be like, that's it. My day is over. For today, something is not, market is not behaving, in accordance with my understanding. Right? This is actually something that's really cool. I keep coming back to this driving example, but I don't know. I drove in on the right side with the right-hand drive vehicles in Europe, in Cyprus. I drove in America. I drove in Europe. I drove all over the world, right? And sometimes you get there and be like, holy shit, how can people drive here? I hate driving. I don't really hate, but I have difficult. I'm very stressed when I drive in a metropolis where lots and lots of, like in New York, lots of people come to, like, taxi drivers are like mostly Indians, right? I don't know why. It maybe it's just was me. Every time I took a taxi, when I was moving somewhere in Manhattan, it was always an Indian driver. Very pleasant, very, wonderful individuals. But they drove a little bit more aggressively because in India it's a different style of driving, and it always made me stressed that I don't drive like that, right? So there, there is a, even though the rules are identical for everybody, everybody chooses to, to trade or, to drive a little bit differently, the way, according to how they feel comfortable. So this is where I'm not selling a trick. I don't hope that you're going to trade exactly like me. Me and my team are providing knowledge where you'll be able to put all of the pieces together and understand what fits for you specifically. All right. So again, touch base with me and my team on Telegram channel. We post our schedule there. We'll answer any kind of questions. You'll talk to me one-on-one. My dear friends, hang out with me tomorrow. Bring people, sign up to the channel. That's always, always appreciative. Leave a comment. I will do my best to answer it ASAP for all of you. And thanks again. I'll see you guys tomorrow.